Hi everybody, I'd like to welcome Jake Benson from Libra Tax. Jake fares from Texas and also has worked at Capgemini in the SAP payroll module.
Payroll guy?
I know that one.
Oh.
Anyway, please put your hands together and let's welcome Jake Benson.
So yeah, thanks for having me here. Excited to talk about what I'm doing. The most exciting thing in the world is accounting and taxes, so very appropriate that I come here to PwC to talk about it. Like you mentioned, my background is in enterprise systems. Specifically, I was doing SAP payroll. So how I left that world was a Google search one day, and I found out that there was no accounting or tax software for digital currencies and blockchain technology, and I said that's an incredible opportunity. I think in this new decentralized world of asset exchange, every time they go back and forth, there's an accountable event, and oftentimes a taxable event. So that's the foundation of Libra. We're a web software company, and to put it simply, I like to say we're the accounting layer for blockchain technology. We hook up, though, to either the blockchain or third-party services like Coinbase and other wallets, monitor your transaction history, and process those records for the purpose of capital gains and losses, and other tax reporting purposes, or just bookkeeping purposes. So, I don't know if any of you are familiar, but the IRS last year issued a very important piece of guidance. That was Notice 2014-21, and it was the notice that digital currencies, they refer to them as virtual currencies, are a capital asset and not to be treated as a foreign currency. So that would cause quite a controversy at the time. A lot of people thought it may have been a death sentence for virtual currencies. They didn't like the treatment that received. A lot of Bitcoiners didn't, but it's probably the correct classification because foreign currency is, one, got to be a legal tender, and two, it's got to be issued by a central government. Digital currencies simply don't meet those qualifications, so there's really one other spot for it, and it's a very just generic capital asset. So the one issue that creates is, so people like to use this stuff as currency. Even at a small transaction level, there's no de minimis exception. If you buy a coffee with Bitcoin, you have to measure a gain or loss because you had acquisition cost basis for that asset, and then when you disposed it, you had another exchange rate, and there is a measurable gain or loss there. So my software tries to eliminate all of the manual hassle that would have created. Another nuance to this is tracking capital gains or losses for the individual when it comes to investing in stocks isn't always the user's burden, and actually, in fact, it's mostly not. It's the broker's burden because they issue a 1099. They know your basis to begin with of these assets, and they know your basis when you dispose of them. And it's already reported to the IRS. When it comes tax time, you just simply add your 1099 information, your schedule of being done. With these distributed assets, there is no entity that's necessarily responsible for issuing this 1099, and you'll see at no Bitcoin exchange or any wallet are they tracking cost basis for you or holding period for you. So capital gains, short and long-term rules apply, and without a service to address this in a distributed world, the users of these digital assets would totally be left out in the open. Now, I guess if there's any questions before I start, what I'll do first is just demo the software real quick to show you exactly how Libra has solved this problem, and then kind of get into some of the details after that. But any questions to begin with?
Just a couple in terms of scope. I mean, there's a couple governments looking to issue a digital currency. What happens if one of them do, and then it does really become a foreign currency?
Yeah, that would be extremely interesting. And I just think we're in new territory here. If that were to happen, probably that specific digital currency would have to be classified as a foreign currency. Yeah.
What is you're looking outside the U.S.? I mean, my company deals in international type of things, and this is a problem in many places, depending on the classification and things like that.
Can you repeat the question, please?
Yeah, so the question is, what about in other countries? I'm not an expert in global law by any means, but of course I watch this stuff every single day. And in general, we see that other governments are using the same general idea that this is not treated as a foreign currency. It's a capital asset, and within those terms, every country's different. VAT tax applies. For instance, in Australia, the fact that it's not a foreign currency pretty much eliminates it from being usable, since there's a 10% VAT added on every single purchase or sale of Bitcoin itself, which is kind of crazy. That's not in Britain, so there's a wide variety of different guidances, especially because tax law is so different from country to country. But in general, yeah, we haven't seen really any jurisdiction yet actually consider virtual currencies a foreign currency. Because like I said before, the basic two requirements for that, digital currencies don't come close. So, yeah. Is there another question over here?
You said if a foreign government were to issue its own and it was foreign currency, would be interesting. Do you mean interesting good or interesting bad?
I think it would be awesome. I'm all for the technology. I would love it. But there's also what comes along with this technology is the political intentions as well. So some people would think that's a bad thing. Anyways, let me just sign up for Libra real quick and show you how we eliminate the processing burden. You can get started with any email address. We're not a service that really to follow in the vein of distributed technology. We're not necessarily interested in exactly who you are, so just get started with any ID. Oops, we don't validate it even. For now. Let's see. Basic things you need to know about exchanging digital currencies, really any asset for that matter, is there's a general notion of you're acquiring them or you're disposing of them, and within the acquisition side, you've got, you could be purchasing them, you could be earning them as income in the case of mining, you could receive them as a gift, or you could literally just be transferring them from one of your wallets to another, in which case it's irrelevant. As a disposal, you could be selling that asset, you could be giving it as a gift, or you could be donating, and then again transfer. But each one of these has to be specified in some sort of system in order to properly process that record. There's a different cost basis, methodology, and a different rule that applies for where you recognize again. So right now what I'm going to do first is just simply, we're hooked up to a lot of different wallets, so the popular one being Coinbase. I'm going to connect to that. Authorize my connection.
Was your code sent to your smartwatch?
I just got this, so I'm learning all about the new notifications you get. I was hoping that the code would come through the watch. I only got the notification though, and still had to use my phone to actually get the number. So Authy needs to step up its Apple Watch game. Okay, so we're still synchronizing with Coinbase here. Boom. Now with Coinbase, it's a centralized service, and we're getting this information directly from the Air API.
Yeah, so Jake, a question, is their API completely open, or did you need to basically like negotiate with them in order to have access?
Their API was open.
Okay.
Now they are sort of closing that off because you can see here the type of data that comes through.
Yeah.
You can still use their API pretty freely. You just have to be in touch with them, and it's not as easy as it was before. But you know, we're providing pretty legitimate service here, so they didn't have any problems sending the data over. But yeah, as a general rule, you can go and make an app on top of their platform fairly easily. So getting this transactional data now, there's a few things that our software does. One of the most important things is take the exact exchange rate for which you bought that currency. So you can see here I bought 10 Bitcoin for this exact amount. Now that's convenient because Coinbase told us that exchange rate. Now let's say here's a transaction right after that where I sent out to a blockchain address and I sent 0.22 BTC. There's no way in the world to know, because nobody recorded it, not even Coinbase does, what was the basis of that transaction, what was the value at the time it was transferred. So what our software does is automatically, and you can see this little M here on the value column, what it does in the background is take a look at the timestamp for that transaction and substitute a fair market value there. So our fair market value is actually a volume-weighted index of not just Coinbase, but other exchanges too. So that's one piece of the automation that our software does is in the event that we don't have an exact exchange rate, we provide a fair market value there for you. That's what's absolutely necessary for accounting purposes. And so you can see I have a bunch of other history here. Our software can automatically detect if a movement of funds is going from one of your accounts to another. And so instead of saying there's a purchase or a sale, which is our default for these incoming and outgoing transactions, the transfer setting lets the software know that this is a non-taxable event.
How do you know the origin of the accounts? So where does it, what is the mechanism that allows the software to recognize
Good
that?
question.
Can you repeat that question, please?
Yeah,
Thanks.
so how does our software know exactly how to identify one of these transfers? Where's the origin of that transaction coming from? So, the transaction hash. Here, since I've only loaded Coinbase transactions so far, we've only marked transfers because Coinbase knows when it's going from the vault to your hot wallet or whatever. Now I'll show you right after this how I can load into the software also just a raw Bitcoin address, and I'll show you where we identify the transfers there. So here I know that, just because I look at this stuff all the time, this address right here is one of my raw Bitcoin addresses. So I'm also going to link that to Libra. So I'll just say add right here. I'll give this a nickname, say blockchain address 1. If this is an address where perhaps you receive mining income, you can check this box and then our software will default all of the incoming transactions to be the income setting rather than purchase. Because one of the important things to know is when you mine Bitcoin, it is income at the moment you mined it, and there is that immediate taxable event on top of however you dispose it later. But the bottom line is income, any mining rewards are taxed at the value at which they are received in the year in which you receive them. Not a lot of people know that, so one very important thing to keep in mind. So I'm going to add this address too. Small screen, so this one item's getting goofy here.
So is your plan to API this to like TurboTax?
Yeah, yeah, absolutely. I wish we could already, but TurboTax itself doesn't have a very open ecosystem. So yeah, when we get the chance, we absolutely want to forward this data on to TurboTax. The first thing we're going to do actually is integrate with QuickBooks Online. They have a pretty open API, but TurboTax specifically has one of
What
Intuit's
about
products.
Coinbase directly?
Sorry?
Why not sell it as a service to Coinbase?
So
All right, never mind, that's
Coinbase-
more a business question, this is
yeah,
technical. so-
yeah.
Well, you work with, you work with a number of things besides just Coinbase, right?
Yeah, we do. So we also have integrations, and really our goal is to integrate with absolutely everybody. But right now we have BitGo, Bitstamp, Blockchain.info, BTCE, and Coinbase. But as fast as we can, we add integration with exchanges and wallets. Zappo is going to be one of the next ones. Yeah.
Cool.
Yeah. So when you add an address, we actually do a couple very, very cool things. And I'll actually need to go look at a specific one to show you. But we can list all the associated addresses, anything that has been sent to or from your addresses, we list here, and any other addresses that are provably yours, basically based on the TX input side of the blockchain. We can go and say, we know these must be your other addresses too, because you spent them in the same transaction. So we do some smart stuff in the background to make it quite easy to get yourself connected to the blockchain. But what I was saying earlier is that when you add a address from the blockchain, I'm going to try to find one here. Here, for instance, here is a transfer that we've detected. Now I'm going to go look this up, and someone slow me down if I'm going too fast.
Whenever you get to it, you talk about wash sale, any issues there?
Yeah, that's a good one. So that particularly only applies to equities. So
Okay.
and I mean, in theory, that rule should absolutely apply.
What's
but
the question?
The question is, do wash sale rules apply to the exchange of virtual currency?
Yeah, basically there's a rule, if you own a share of AT&T stock and you got a loss because you bought it for $100, trading today at $90, there's a rule, but for this rule, you could sell it, December 30th. You claim your loss in your 2015 return, buy it back 2 days later in the new year, or actually buy it back, a second later, it wouldn't matter if the rest of your end, and basically be in exactly the same economic position, but now you've realized the loss. And so there's a rule that basically says, let's call a wash sale. You're not allowed to basically take that loss if you sell and buy back exactly the same security within 60 days.
30 days. Yeah.
So not allowed in Bitcoin world.
That rule does not
That
apply.
rule doesn't necessarily apply. So yeah, you're free to trade it whenever you want to.
Take a loss, realize the loss.
Right at the end of the year,
And part of
yeah,
it's because
for
of
loss
its
harvesting.
It's because of its current classification, which
That's
could
right.
change.
Yeah.
It absolutely could change, and I mean the intent of that law should, in theory, apply to Bitcoin as well. But just in the absence of the IRS specifically calling it out, since there's that little gray area, yeah, the rule
Well, in
doesn't.
the absence of having your tool that would be able to actually track the wash sale, right?
That's
I mean,
true,
it's
too,
one thing
yeah.
to create a rule for which there's no technology to allow it to actually track.
But if you want to show,
Yeah.
get the fund for the loss, you have to, report your spending habits. I guess you're saying not report buying it back. Is that what you mean?
Well, just
You have to
saying
report
there's
the
no,
loss
but for
if you want the loss.
this gentleman's technology, there isn't the ability to track the wash sale transaction, so, you know.
Well, if you want, you did it for a reason. You did it because you want to realize a gain and get that on your taxes. So you have to report your information in order to benefit from that. So like you were saying, just
Yeah,
not
that's
report
the
buying
other
it back.
thing.
Yeah.
Yeah. So our software doesn't identify wash sales. We don't really touch that since there was no specific guidance in the notice regarding wash sales. Yep. So I was going to show you this one transaction here. This is how we can identify a transfer from one account to another, which is a really cool feature because part of the insane challenge in sorting through all your transactions from the blockchain would be knowing which ones are going back and forth because users do that all the time. And you would have a sea of transactions, only X of which were taxable or accountable. So here is one of those transactions. Like I've already told my software, this address here is mine. It also determined that this address is mine because in a later transaction on the blockchain, we see these two addresses spent in the same transaction. There'd really be no way for me to do that if I wasn't in ownership of both those private keys. So one clever thing we do is anytime you add a single address, we look for any other addresses that might be yours. So since we know that this address is mine and this address is mine, we take the amount that was sent to that address and that actual transaction there is marked as a transfer automatically without the user having to do anything. So if you have a bunch of different blockchain addresses and you simply add them all to our software, one big time saver is the fact that we know the movements back and forth. And even with Coinbase, their API in particular does send us the transaction hash when it is an external transfer. So even if I were to add Coinbase plus blockchain addresses, we still got the transfers identified. So that's pretty nice. It sure removes a lot of the complexity if you're doing all of this retroactively, because I've seen nobody's really keeping their own good records. So you can hide those transfers since they're irrelevant. We allow you to do things here in this field. Let's say we have a little tagging system to add metadata, so if you wanted to say this was lunch, we make a little tag in the system there. So for whatever reason you may want, we let you add a little piece of metadata onto your transactions. Now what I'm going to do here is, since I have a somewhat complete picture here, it's not all my transactions, but it's good for demo purposes. I'm also going to change some of these to demonstrate what happens when you have other types of transactions besides buy and sell. So we can add income here. I'm going to say this one was a gift. I'm going to say this disposal was a donation. I'm going to say this disposal was also a gift. I'm going to click calculate. Right away, we can instantly tell you what your realized gains or losses were. So what our software does is apply a cost basis methodology, which you actually get to choose. So what the IRS recommends, but it's not absolutely mandatory, is first in, first out. That's a very standard method, which means your oldest coin is always the one that the software disposes of, without any exception. LIFO is pretty much the exact opposite. Last in, first out. Your newest coin in inventory is always the coin that the software will dispose of. So you can see here, hopefully, boom, we have my LIFO gains and losses here too. We have the average cost basis method, which isn't typically used in the US. In Canada, that's required. And then we have one last kind of cool basis methodology, which we program. It's taking advantage of the selective cost basis method that individuals are allowed to use. And what this does, and hopefully we'll see here, is it should reduce our recognizable gains or losses. And that's because at any point in time where you're selling a coin or an asset, it's in your best interest to dispose of the highest basis coin, not necessarily your oldest or your newest coin. but the coin with the largest original basis. And that's because the difference between a high basis coin and the current price is technically going to be the smallest gain or loss, the smallest gain or the highest loss. And then the other thing that this optimized method does is, let's say you're donating or gifting a piece of property, we actually dispose of your lowest basis coin. Because in the case of a gift or donation of property, you are not actually the responsible person for whatever recognizable gain or loss there is on that asset. When it's a donation, it just gets ignored by the IRS. If it's a gift, now this is interesting, that basis, the original basis, transfers to the new person. So how that basis would ever be communicated on blockchain, I don't know. That's a whole big challenge in and of itself. The fact that remains is when you're disposing of these assets, if it is a gift for the person that's giving a gift of property, so for instance, change tip, people are giving this Bitcoin and other stuff back and forth over the internet all the time. The person giving the gift, it's in their best interest to give away their lowest basis coin, because that eliminates a future potential gain that would have been higher. So that's one cool thing we do with our software.
And Jake, and I don't want to ask you to divulge your secret sauce if this is proprietary or whatever,
Yeah.
does your optimization also take into account holding period? In other words, it might be,
Yes.
you might be better off selling something at a lower basis that you've held for 13 months than
So
a
there's
high
two
basis.
options here. We have one optimized
gotcha.
for high cost.
Gotcha.
Yeah.
Good, good, good. Okay.
Yep. So we optimize for always
Okay.
disposing in high cost basis.
Gotcha.
Or let's say you knew you were going to move up to another tax bracket and your long-term capital gains tax rate would increase later, and you want to get all of your long-term gains out of the way now, you can select that method. So it's kind of cool. It's configurable. You can see doesn't really take too long. Now if you have tags, we subtotal all of your tags, and we have other transaction types that we track here. So all of your income from mining, for instance, you would know right away that needs to add to your basic income at the end of the year. And then let me now show you the output that we give the users, because that's the really important piece. Your gains or losses are great informationally, but what does the IRS need? I'll show you. Let me sign out.
What's the limit on the number of public addresses you can upload?
We're unlimited.
So
Yeah.
you can
Yep.
upload
Eventually-
a number of public.
Yeah. It doesn't matter how many. It will take longer process, of course, but we have not imposed any limits on that yet. Eventually, there'll be some sort of paywall where we see like the highest 20% of users will initiate some kind of paywall. But for right now, we're unlimited transactions, unlimited addresses, just because. Now we have one cool feature of our software is that let's say your accountant has an account as well, or one of our pro users actually, you can share your transaction history with them. So I just gave access to this pro account. And I'll show you what's special about a pro account is that there's additional reporting features there. So let me sign into that pro account, and I've shared my transaction history. Okay, now this is the account I just created. I'll go look at this, I'll go back to the calculate. What we do is one thing, we add an extra category here. So this field could be used for mapping it to, let's say, your chart of accounts. If you wanted to, that's where we're actually going to leverage this software to have downstream integration with your standard accounting platforms. We're not trying to reinvent the wheel. But let me calculate now, and I'll show you the, I thought I unlocked this. Well, if you bear with me, I'm just going to go unlock that account so you can see the reports.
Is there a material cost to you when a user does upload a number of
Not a lot for us yet. Nothing that we're real worried about. We even have some trading firms out in New York that are booking 1,000 trades a day on our system. So yeah, we can handle quite a bit. We designed it to be industrialized, and obviously, you know, if exchange of digital assets really starts taking off, we'd like to have a scalable system.
So to labour on the point that the 1,000 trades are using 1,000 different public addresses.
Sorry?
With the 1,000 trades, each trade is using a different public address.
No, they're actually, and I'll show you, they're sending to our API. So even on exchange, nothing's happening on the blockchain, really. So they're sending us 1,000 exchange trades a day off blockchain. Broke my own system. Anyway, I have some downloaded already here that you guys can look at. So let me show you, really more important than the actual gain or loss is all your detailed records. So I'll dump out of our system here all the actual processing that we do. So all the inbound assets, if you will, receive a particular unique ID in our system. And this is actually like a tax lot ID for stocks. It's not recognized by the IRS, but to have a unique ID on a particular set of a digital asset, how much is in that particular lot and when its original purchase date was is important. So we create these unique lot IDs in our system. And then we match each disposal with its original acquisition. So let's take a look at kind of one record here, and I'll blow it up. I purchased 3 Bitcoin, is what this says, on November 4th, 2013. I later sold 2. Its original cost basis was $236. 2 Bitcoins at that basis, so its total basis was $473. And I sold that at a later date. This is April 17th. At a sale value of $504. So you can see pretty easily we're going to recognize a significant gain here on this coin that went from this price to this price. And there's that realized gain or loss on individual line items here. And we tell you if it's a short or long-term gain. This matrix right here is literally what you can hand to the IRS on your tax return, and that is absolutely sufficient for them. This particular report is actually a little bit of extra detail. We have a report that's exactly like Form 8949, which is what the IRS requires. And you can see that it can get pretty complicated because sometimes you're even splitting particular lots. You're selling more out of one that exists, and you can jump to a lot that has a different basis. And this is all dynamic based on the accounting method that you use. But the idea here is that whether it's with Bitcoin, whatever else becomes exchanged on these distributed public ledgers, the accounting, and especially the gain and loss accounting, is going to be a huge challenge. So with the connections that we're creating ourselves and hooking up to external APIs is one thing, but we also have our own API, and I'll show you really quick here how you can send us really any asset with any cost basis, and we'll do the accounting for that. So let me go to my website. Here's our API. And basically this is a way to write to our platform. And again, it can be quite anonymous if you wanted to. We don't really authenticate besides that an account must exist. We don't collect any personal information, but you can send us here basically the same format of data that you see on our table, so all those input values. You send us a date, you send us an amount, you can send us a value. You don't have to if you don't want to, because we can input the fair market value. You can choose to send us a destination or no. Those are really just open text fields. And then the tax type, which is the configuration setting that tells the software how to account for that. So what we're adding here pretty soon is another value, so you can set your own type of asset in our system. Right now we're pretty simple, USD and Bitcoin, but in a couple weeks we're launching with this really configurable system, which I'm going to show you hopefully here. This is a version where you can see we've actually involved other foreign exchange here. So we're trading euros, Canadian dollars, Bitcoin, and I could change here right now. I could say this is gold, for instance. It doesn't really matter. Anytime you're exchanging asset A to asset B, records need to be kept and gain or loss needs to be generated. So we have here, you define your own asset basically in this column. It's valued in its basis currency here, and when we come time to calculate, we've actually got gains or losses in all three of those different assets, because if you're trading in the US, you even have to, there's a de minimis exception, $200, but you still have to account for and declare your gains and losses in foreign currency too. That's not necessarily unique to Bitcoin. So we actually, like I said before, we're having trading firms that have euro on the balance sheet, Singapore dollars on the balance sheet, British pound on the balance sheet, Bitcoin, other digital currencies, and in the end, they all have to know their gains and losses on each one of those individual assets in terms of USD. And they're using our system to do that, so that's pretty cool. This one's taking a while to calculate, but
I guess on that point, you're operational, people are running live transactions on the platform. You're just in scale mode.
mm-hmm.
Is this accurate?
Yeah. And then one sneak peek feature. I mean, that's it in a nutshell. I showed you guys what we do. But the logical extension, once we have these kind of records, is to add some other analytical pieces and visualizations on top of that. So let's see if we can get it to load here. The internet just seems like it died. Okay, so transaction history. So just some standard graphing features where we graph the balance of your asset over time and its value kind of on the same chart. So you can see here my balance of Bitcoin got quite high when the price was quite high, and it came down a little bit there at the end. But this is cool because there's not actually a really decent dashboard system yet with some basic features for digital assets. So what we're doing is hooking up to every new distributed ledger that we can, every third party that's doing a service on top, and really trying to be that accounting layer for the blockchain. That's it. Any questions, guys?
What are the biggest challenges for you to overcome in the short term?
So, sorry.
Yeah, that's a good question. Not a whole lot of taxpayers, so you can imagine a lot of the early adopters in Bitcoin got into it for their own political reasons, and there's a lot of investors in it specifically for tax evasive purposes or anti-establishment purposes. So I'm waiting for the industry to mature. That's my real challenge right now. We've got the product built. It's a pretty cool one. And hopefully, we can attract people with some of these value-add things like graphing and just simple dashboard features where tax becomes a feature of our software, not the focus. But yeah, right now, I think my biggest challenge is still a very, very immature industry still. Yep.
So, sorry if you already mentioned, did you see a lot of use during the last, because this was live during the last tax one, right?
Yep.
Did you see a lot of use?
Yeah, that's when it jumped up a lot for us. Yep, and that was
Especially if you
the.
bought a whole bunch at 1,200. You know,
Yeah, lots
There's an incentive to report it correctly.
Yeah. Yeah, that's an interesting thing. In a time of losses, actually, people might be more inclined to file because they're actually getting up to $3,000 a year in write-offs versus actually paying some out. So yeah, definitely picked up in the
But they have
taxes.
to claim that one.
So this is a Schedule D, right?
Yes.
And you don't have to report Schedule D if it's under a particular amount. Do you know what that amount is?
So I'm not sure exactly what you're referring
I
to.
think, it doesn't it, I
I'm
thought
not
there was
aware of the
something you
minute.
didn't have to do it for every, I mean, there's lots of stuff, you go to Europe and you buy some euros, and you come back and there's a difference, you could technically
okay.
report that. But
Well-
there's a limit of what, you don't have to do it unless it's above a certain size.
So that applies to foreign currency, yes. So that also doesn't apply to Bitcoin. But with foreign currency, let's say if it was euro, any transactions that result in a net gain or loss of less than 200 are non-reportable. But that is specifically for foreign currency. So that was one thing people were a bit upset about, is that that exception doesn't apply. So even a small, tiny gain or loss is reportable technically when it comes to Bitcoin. Yeah.
So, what do you pay for this? That's for $19 somewhere?
Yep. For individuals, the tax report it's $19 for the year. You can use that report unlimited times for $19.
So what do you get? Because what you just showed was already like the total capital gain or loss. So why would I need to report?
Let me show you. The IRS actually requires IRS Form 8949. Let me show you this real quick. And Schedule D. They want your line item gains or losses, not your total. That would be nice if they just wanted your total, but you have to prove there with line item detail on 8949. And I'll bring that up real quick. On every single transaction, basically. And this is that form. Sales and dispositions of other capital assets, and then I'll show you Schedule D. So the forms go hand in hand. 8949 is a subset of Schedule D. Schedule D is where you report your summary, that single line item of gains or losses. So particularly right here on line 3, you say all your sale prices net all your cost basis, net, and then your net gain or loss. But then you can see they require 8949 to prove out these values here, and that's why you technically need the line item gain or loss. So we have a report called our tax report, which is actually in this same column format. The IRS doesn't require that you send them this PDF form. As long as you send them that spreadsheet or that data printed out, it's plenty sufficient for them. It just needs to be noted that that this is box C right here for short terms in part 1, and then long term in part 2, box F. That's documented in a YouTube video on our website, because nobody's going to remember that. But yeah, it's Schedule D here, and then our report is a substitute for this one.
So, what I'm trying to figure out is why, like most hosted wallets don't have this built-in.
That's a good question too. Yeah. So,
What's the question?
why don't hosted wallets have this feature built in? So partial records are as good as no records is the short answer to that. But the other thing is they don't know the basis of assets coming into them externally. So if I were to send 50 Bitcoin to Coinbase and then sell that Bitcoin, they have no idea what my basis was, and the burden falls to the user. So that's really why they don't, because they can't even. That they don't know. It's up to the user to track their basis. Whereas it's a little bit different at a brokerage where there's a tax lot reporting system, and basis for particular tax lots is tracked. So if you were to send your stocks from one brokerage to another, there is records there, and you would be able, and it can even be automated. But in this world of distributed assets, that's the one killer thing, is that the only person really in the world who knows your basis, and therefore how to account for this stuff, is the user. Yeah. And then the other thing is, at the wallet level, they don't really give you a way to define a type of transaction. So let's say if you're disposing of something and you're sending it to a friend, whether it's a gift or an actual sale, really does matter, and how can the wallet know that either? So you need a system like ours, which allows you to also include the metadata on that transaction for which type it is. Yeah.
It's a gift today. We all have gifts.
Do you know when, like Coinbase, is it first in, first out when you buy and then sell? I mean, buy or then purchase something with those Bitcoins? Do you know how Coinbase themselves, what addresses they're using to pay for something from Coinbase?
No, they don't even have a methodology. So the idea that these are fungible assets means which TX outs they're spending actually doesn't matter. It's the accounting methodology that's applied.
But it is on the blockchain, right? So I bought something at 1,000, and then I bought some Bitcoin at 1,000.
Not on Coinbase. It wouldn't be.
But again, it's what counts. It's what counts legally.
Yeah.
Which is that they don't look at the cleanness of the individual coins. They're looking at the account level, not the coin.
Yeah, that's the question.
I mean, that would be like going, this quarter, as it moved around,
Sure.
whatever I had
Yeah,
to report on it.
exactly.
Sure.
So,
Cool.
Yeah.
And your relation with Bitwage?
Oh yeah, the Bitwage guys. So I've known them for a long time.
Maybe explain what Bitwage is.
Yeah, Bitwage is a way for you to tell your employer's accounting system, send part of my funds to this bank account, and they exchange that for you. So it's basically, in effect, a way to receive a piece of your payroll earnings in Bitcoin by telling your employer to send, say, 10% of your paycheck to the Bitwage bank account. They'll immediately exchange that for you and give you an account with Bitcoin in it. So clever way.
It's another really much more important use than that is overseas contracting.
Yeah,
So when I send money to a programmer I have in Sweden, his tax rate for that is fairly high, and there's a, what, 3% currency conversion or something in the various methods of doing it, and I can send it to him and have a fraction of a percent currency conversion by doing it through Bitcoin. So I'm saving 2% or whatever, and then he has some advantage because of it on his end that he doesn't have to pay as much tax. He's taxed at 20% or something like that, rather than 40%.
Yep, those are cool guys. I like those guys. Really clever use case. And then our relationship, we haven't actually done the integration piece yet, but the idea would be to have those income records automatically come into our software, so anybody that's receiving that income doesn't have to, think about the accounting implications. We already have their income records there for them. But yeah, everybody just go. Yeah.
Yeah, so people who use services like the H&R Blocks Online or TurboTax to submit their taxes, is there any plan for having like your export format that can be imported or integration directly with them?
Yeah, that's what I want to do. I haven't gotten to that point yet, but that's the clear logical progression for me, is to build out export formats. And I've done some research. Those platforms are not as open and API friendly as the rest of the internet that we're used to. So it's super easy for me to hook up to Coinbase and these other wallets, and then I've gone down the path of trying to integrate with TurboTax already, and they got some ancient interfacing system they wanted me to learn, and at this point wasn't viable for me. But yeah, really we are positioned to be a middleware kind of service as well. So between a blockchain and a public ledger, the middleware between that and traditional accounting software, which the entire world uses. So yeah. I can't wait to get hooked up to H&R Block, licensed to them, and TurboTax too, yeah.
So, in my particular case, I have a Coinbase for myself, and I have a Coinbase for my business. I only really keep track of transactions there. I'm not adding in all the other different types of transactions for that. I'm probably, unless I have more than $600 worth of profits and losses, I'm probably not going to worry about it this year personally. But since the company is paying for some programmers overseas that way, that's the one that probably at the end of the year I'll pay for the report and everything to help with that. And that's a different report for a small business. So, is there anything in particular for a small business that's different in regards to your data?
So we have our business version, that's Libra Business. For gain and loss tracking, it's really the same thing. And no, to be specific, it doesn't address business tax specifically yet. It's just your gain and loss report. But that's one part of our system. We have a marketplace of CPAs and accountants who are actually, because there's very few of them, who are actually familiar with digital currency. So in our system, if you put help, need help from a professional, we have CPAs in our network that are familiar with international taxation that can help you out with that. And they're not going to glaze over or think you're stupid when you come to them with Bitcoin and digital currency. Because you can imagine why the accounting communities, tends to be a little bit slow with technology. So we've collected the ones that actually know what they're doing, digital currency.
Join me in thank you. Okay, see you next week, Saturday, 9 a.m.